Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Alconin, along with Brianna Valesky. We have Serge Berger on the line. He's head trader and investment strategist at the Steady Trader. Serge, how you doing on this Monday morning?
Good morning, Joel.
When we spoke to you last week, you were in the bullish camp here, and the market ran up to new all-time highs on Friday. All-time closing high at 19 even. High in the spoos 21.2275. Kind of a sleepy session today here. We were talking about breakouts with Anne Marie, and she just not buying of the breakout camp. Where are you?
Mhm. Yeah, look, I think the call has been right so far. My very simple case is this. It's to me, it's very difficult to imagine we're not going to sneak past this line of resistance. We did so, right? 2120 has been now been overtaken. It's extremely difficult to imagine we're not going to see, say, 2150 or so. After that, I think is where it gets challenging. So to me, there's an increasing likelihood we'll see a breakout, fake out. I've been talking about this now for 2, 3 months. I'm also on your show, and I'm sticking to that. And I think a lot of that, if you look at some of the participation, we talked about the divergences between transports and the Dow. We talked about semiconductors lagging. There's a lot of things here that are of concern, including interest rates, which to me, it seems to me like obviously we're a little bit oversold here on bonds, but I would expect us to make a lower high in bond prices, i.e., a higher low in yield terms going into the summer.
Yeah, I mean, someone's getting a little scared here in the bond market last week. Also, a good proxy for that, the TLT. Just seems like someone out there, some money on the street, is just thinking rates are going up. What's your take?
Mhm. No, I agree. Listen, I had a discussion earlier this morning with a pension fund over in Europe, and we were discussing just duration, and they've been short duration for some time, which is interesting because they're usually wrong, but I think they're kind of right on this. I think we're finally at a point where we're also in Europe, and economic data aside, it just seems to me like it's been a little overdone, with the rates. With the rates basically trading in negative territory. If you look at even Swiss rates this morning are back in positive territory, so it seems to me like we're just kind of slowly moving into higher yield. And I think once people start believing that, I think that's when we'll see some sort of a shock effect in equities. Because we talked about this last week. Usually equity volatility tends to be the last of the asset classes to see volatility. So you first have commodities, FX, currencies, I'm sorry, rates, and then ultimately get to equities. And that's exactly what we've seen over the past 10 months.
Right, and I mean, also, I mean, there's nothing saying that once rates start to go up, that the market can't continue to go higher. We've seen that
Yep.
definitely work into the past year. I mean, the thing that puzzles me is really does the economic data that's coming out really support an interest rate hike?
Yeah, yeah. Well, I think, to your point, I agree. I think, a lot of people think higher rates means lower stocks. Not at all. I mean, if you go back empirically, history tells us something else at different parts of the cycle. But I do expect us to see a little bit of a shock. And again, it's just that initial shock once people see that the Fed actually does raise rates or is really means it. And again, but I don't think we're there. But once we are there, I think people will be a little bit surprised by it because the economic data, I don't really think it's all that strong. Housing data has been a little bit better as far as I'm concerned, sequentially and year over year. But, it's few and far between from saying, listen, we've reached escape velocity. I don't think we're anywhere near that. The question is, what, does the Fed really just want to raise rates come hell or high water? And I tend to think we're closer to that than people think, and it's not as data dependent as people think.
Okay. All right. Moving on. Goldman Sachs making a big call here in the crude oil market. Not a peachy forecast. Downgrading some of the stocks in the issue. Not a expects oil to be trading much lower than it is now. Market was shrugging it off earlier, but now coming back unchanged. You've been
Mhm.
on the street. You've heard these big boys talk here, and they talk in their position here, or do you agree with their outlook for oil?
It's always a little bit, I'm going to say tricky, to kind of hedge my bets when it comes to some of the big guys, particularly Goldman. Everyone, follows Goldman's calls. I tend to think if you were to sort of average these out, they kind of work out half the time. Because a lot of times they are talking their book to some extent. I don't think an investment bank, personally, and it's not even criticism. It's just I've been inside these walls for too long. I don't think it's really really possible to completely operate without any sort of interest to your client base. So, or to your book, for that matter, right?
Okay.
So, so I tend to think that, that call be whatever, to whatever extent they're going to be right or wrong. It'll probably be about, sort of halfway between what reality will be. That's kind of my take on these big major calls from Goldman.
Okay, you a little bit nervous about the retail earnings coming out this week. I mean,
Hmm.
boy, oh boy, Kohl's got beat up. Macy's got beat up, but came back here. So not it has really been a mixed bag for the retailers. You got some big ones reporting this week, some big guns, starting out with Urban Outfitters, and then later in the week, Home Depot and Lowe's, Best Buy. What? Let's just start out. Let's start out with Home Depot. We had someone in the chat asked about that here. Uh,
Hmm.
Home Depot preview going into earnings here, Serge.
Yeah, for sure, for sure. Before I get to home, let me quickly say this. So to me, the retail story is one that's very much changed. I think here, let's call it since the top in April, and a relative top versus the SPY or the S&P. Basically, I think consumer discretionary, which is basically what retail is, a lot of it at least. That has really turned, and I think it's been twofold. I think people are a little bit more scared in the economic data front, and also the dollar has changed, right? So if people forget that when the dollar, goes lower, um, that is not something that helps consumer purchasing power, right? It's the opposite. So to me, that's the major difference that's happened between the first part of 2015 and now. In terms of HOTIP, so if you were to look at, say, the XRT, the retail ETF, and you were to divide that by the SPUs, or the SPY, you'd see a major trend change. And I don't think that's over. I think retail will continue to underperform and consumer discretionary as a group. Home Depot, a lot of people like to use that as some sort of a proxy to the housing market. I'm not sure it's that easy, but considering that I am still pretty constructive in the housing market, mostly because of the hiring numbers I see in there, um, to me, Home Depot looks pretty good. It's hard for me to be bearish, but as you know, I don't like to hold stocks trading positions through earnings. So, Home Depot, if we can get out of this line of resistance, which is probably around 116 in my book, I don't see why we can't go higher. But other than that, I wouldn't short it. Let's put it that way.
Yeah, I mean, do you don't generally play stocks going into earnings, right? You kind of let the
Right.
dust settle. I mean, maybe if you have a position, you'll trim a little bit, but you're not like a lotto player on the options on these, right? That's not really your style.
No, it's not my style. But I actually think empirically throughout my career, I've seen much better probability trades come out after the fact, right? So once the stock's made a move, whether that's up or down, or even sometimes when it doesn't do anything, it tells us a lot more than what we knew before, right? It tells us, investors usually vote with their wallet pretty quickly, and you can get the occasional breakout, fake out move, but I think on average you get better moves, better clarity. Look at Alibaba, for example.
Oh, that was
That move, and we talked about this last week, and it's been a beauty. Fake people out right below the support line below $80 2 days before earnings, blasted higher after earnings above 86. Now it's consolidating. It looks constructive. To
okay.
me, that's much more high probability than trying to gamble it through earnings.
Yeah, this is one's getting interesting here because you bumped up against the high on earning days a couple times. Haven't been able to bust through. Trading a little bit lower here, but
Yep.
definitely interesting formation here. Moving on here. What do you make of Best Buy here? No news, no downgrades, earnings coming out here, and someone just has an opinion on this thing going contra to the market here. Best Buy, what's your take on that?
Best Buy to me is a classic headline risk stock. All you have to do is peel back the chart to, let's say, beginning of 2013, and we don't have to do it on air, but you can count the amount of up and down gaps pretty quickly. So clearly, there's a lot of a lot people put a lot of weight on the sales numbers in Best Buy, and it makes sense, right? It's an important consumer electronics and that stuff is important. Um, but to me, I would be extremely aware holding something like this to an earnings report. Up and down gaps happen a lot. In fact, what you can do, you can try to play try for a close of the gap if you see a gap up or down after earnings. That doesn't always work, but there's somewhat of a trend there.
Okay, we got a question. GPN from Rob Hood. Global Payments Inc. Common
Mhm.
stock here. Whew. I mean, I don't know how we could tell Rob Hood to sell this thing, but Serge, what are you looking at from your
So
technical?
GPN is an interesting one. It's actually a stock that in my circle of hedge fund guys that we talk about a lot over the past few years, and it's just because it's been a real trending stock. It's been a real trend follower's dream. I mean, you just you just look at that thing, and there's an interesting story. I mean, the global payment system stock, and anything from electronic payments to anything that's even more indirectly in that space, like Visa, Mastercard, and all those companies. They've been doing very well, and I don't see a reason why you need to really dump this stock. I think it's something where you can kind of just follow the trend. I don't think you need to buy it up here, right? But there is a big move that's been happening in online transactions, and this has been clearly reflected in these stocks. And GPN continues to be. I haven't heard anyone turn really bearish in my circles.
Yeah, I mean, it did make the all-time high on Friday at
Hmm.
105.87, and I don't like that it came back to close much, lower on the day. Rob Hood, I mean, if you're looking at this short term here, I mean, you did have a low at 99, 103.99 on Friday, 103.93 today. Just from a short-term perspective here, I mean, just looking at the dailies here, you got to drop down to 101.32. That was your low last week. 100 looks like a rock in this thing too. If you want to look longer term, just throw your sell stop in there at 99.75 and let them come and get you here. But nice looking stock here. And I don't know. I'm just kind of off topic here, but do you follow Bitcoin at all? What's going on with Bitcoin?
I don't. I used to, and I just don't care.
Okay.
It's just one of those things. People are way too opinionated on this stuff, and I just yeah, I just can't get excited about it. Maybe I'm totally wrong on this, but I just don't feel like I'm missing out on anything. At least not yet.
Okay. All right. Any sectors? I mean, I know you play both sides of the market here. I mean, market at all-time highs here. Is there anything that you're kind of looking at? Maybe potential setups on the short side.
Yes, I am. As I said before, I like the short side of consumer discretionary and retail's big this week. And as on a bigger note, I actually like short the Russell, both in absolute and in relative terms versus the S&P. And again, two reasons for that. Number one, rates are really coming off here. Look at the TLT.
Okay, let's take.
Um, sorry, I'm getting distracted.
That's okay.
that's
Good.
that's what happens when we have that 9:20 slot. Get right in the market
Okay.
open.
All right. Well, just finish your thought, and we can let you go
Yeah,
here.
sure. So basically, short the Russell and short consumer discretionary, and again, it's basically has to do with the dollar. And I think being this late in the bull cycle, you're gonna start seeing uh, things like small caps, which should have a leading indicator quality to them, starting to underperform. We've seen that the Russell has broken down in relative terms versus the S&P, and in absolute terms, obviously underperformed as well. So to me, I like the Russell short and consumer discretionary on the reasons we said before.
Okay, all right. S&P's coming back, fighting to get back unchanged here. The all-time high close 21.19 even. We're
Mhm.
almost there. We've been on the line with Serge Berger. He's a MarketFi maven, head trader, and investment strategist at the Steady Trader. Thanks a lot for coming on, Serge. We'll talk to you again soon.
Thank you guys. Have a great week.